Bitcoin ETFs did billions. They've already surpassed. If you just look at like the first month or the first 6 weeks, we're about week 7, I think. If you stack them up on any measurement, they blow everything away. At this point, you could probably find something in there like, oh, if we look at the first 2 weeks and we X out GBTC, technically, and we adjust for inflation, technically the GLD actually was tied. Like, there are ways to maybe find a spot in the 7 weeks where it wasn't earth-shattering. But if you go 1 week, 1 day, 4 weeks, 6 weeks, 7 weeks, you look at volume, assets, flows, post-GBTC, extra, whatever you want to do, you're going to find they blow away every other new launch record.
This content is brought to you by Uphold, which is a great crypto platform that I've been using since 2018. Uphold has all the top cryptocurrencies, Bitcoin and all the altcoins. In fact, they have 260 plus cryptocurrencies on their platform. You can also trade precious metals, stable coins, and 37 fiat currencies. In addition, they are available in over 150 countries. And this platform is fully reserved. They do audits, so you can trust that your funds are safe. No commingling, no lending out your funds. If you'd like to learn more about Uphold, please visit the link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Eric Balchunas, who's a senior ETF analyst at Bloomberg. Eric, welcome.
Good to be with you.
Eric, I've followed you and James Seyffart on Twitter, of course, or what Elon calls X now. And I appreciate all the great data you've been putting out there about the Bitcoin ETFs. And we got a lot to talk about. But let's start with your background. Where are you from and what's your professional background?
My background, so I was trained as a journalist, communications at Rutgers. Did that, work for Institutional Investor Magazine, which is a magazine aimed at pensions and investments. Wrote about mutual funds there back in the 90s when they were like the hot thing. And then moved to Bloomberg, which to me was the creme de la creme of business journalism. And there I actually joined the PR team and did that for a while, which was really good. I got to see a lot of parts of Bloomberg. And after 9/11, I moved back to South Jersey and worked in their data office because it was in Princeton. So I just happened to geographically need to work in Jersey, and that's all they did. So I'm like a reporter who got dumped into the data group, and at first I hated it. I'm like, this is awful, especially compared to PR and journalism, which is more exciting. In journalism and PR, you're a mile wide but an inch deep. But I like that. I like to move around. I'm a fan of novelty. In data, you're more a mile deep and an inch wide. Right. And it actually was the best thing for me because I got to spend time really working on problems and in the data. I helped build some tools on Bloomberg to track different things. And in 2007-ish, I got handed ETFs as a data responsibility. And so as a person who tracked mutual funds, I was like, holy moly, these are really an evolutionary marvel. It had to be like what seeing the MP3 was like for a music person. Sure. You're like, wait a second, this is going to revolutionize everything. And it did. And so I dedicated my whole career to it and became like the ETF data guy. And I got recruited by research. So Bloomberg started a research group. They did stocks, bonds, and the guy running it saw me doing some like media here and there. And God was known as the ETF person. He said, why don't you write about ETFs for us? And I did. And I've been there 8 years. And so I lead a team of about 10, 11 people who do ETF and a little mutual fund research. And we publish on the Bloomberg terminal. And obviously that's Bitcoin ETFs is the flavor of the month topic for us right now.
Absolutely. Now you also wrote 2 books, right? Can you tell us about that?
Yeah, one of them's behind me. I shamelessly promote it because, when you're a small publisher, it's not like your stuff's on billboards and stuff. So one of them's called The Bogle Effect, which is about the Vanguard founder, Jack Bogle. Just the really, in my opinion, the most impactful human being in the investing landscape. If you read the book, you'll see why, but he brought all the fees lower. The reason IBIT is 20 basis points or 25, whatever it is, and the reason those Bitcoin ETFs all had that massive fee war, even though Vanguard wasn't involved, their spirit was. They created what I call the ETF Terradome. And because everyone loves low fees, that's why ETFs are so popular. And you take Vanguard and Bogle away, they're going to be a lot higher, less growth. They're the core of everything that you see happening, namely low fees and indexing. Anyway, the other book I wrote before that was called The Institutional ETF Toolbox. If you're in crypto and you want to learn just about ETFs, that's a good primer on ETFs, tells you mechanics, creation, redemption. I go into all the different asset classes. So this is a little bit more of a wider look out because ETFs are one chapter in that book. Then I have a whole ETF book. So I think for a crypto person who's just really curious about learning ETF mechanics, the
Sure.
first book is probably the better one. Again, and I'd be grateful if you were interested, but you won't be let down. They're good books. I work really hard on them, and they basically all my knowledge is in both of them.
I will be sure to link those on the website and in the
Thank you.
description of the podcast. Everyone check that out. Eric, you brought up Vanguard, and I want to get your thoughts, given that, their pedigree and how they view the markets, but they've taken the contrarian view on Bitcoin. Why do you think they're still on the fence?
Yeah, so it's just that's just how they roll. It's on brand. So Vanguard, let's face it, Bitcoin is a little like a rated R movie for most people, for normal people. Like take your parents.
Right.
If Bitcoin were a movie, it'd be Quentin Tarantino. It would not be Disney, okay?
Sure.
Vanguard just does Disney. They don't do the crazy stuff. They don't allow leverage ETFs on their platform. They do allow gold, but they don't like it. They're a meat and potatoes kind of company, family friendly, 60-40. And this in my book on Bogle, I interviewed him many times and I also asked him about Bitcoin. And he had nothing personal against it, although I do think the spirit of disintermediation is huge with him and Bitcoiners. There's a lot of overlap,
Mm.
which is why I asked Matt Hogan from Bitwise to write the foreword to that book, because he's an ETF guy who works heavily in crypto now. And I thought he could bridge the gap between the old fogey mutual fund world and Bogle and sort of connect him to the disintermediation movement that Bitcoin has. And I think he did a great job. But Bogle's problem with commodities was that it's only worth what someone will pay for it in the future.
Mm.
Whereas a stock is a company, and a company has people who go there every day, wake up, create value. That value turns into sales, which turns into cash flow, which turns into dividends to you. So even if the price does nothing and there's no speculation, you get paid. The money works for you. A bond, you get a interest rate, a coupon payment. So stocks and bonds, the money does work for you regardless of speculative return. He argued commodities are just pure speculative return. There is no underlying thing. Now, Bitcoiners will say, well, there are people creating value in Bitcoin. Fine. I'm not Bogle. I'm just telling you what he would say and what
Right.
Vanguard thinks. And I think people inside Vanguard aren't happy about that decision. I think some might be, some might not. I personally think that it's a little nanny state-ish of them. They
Mm.
should just trust their own investors to make decisions. If you found Vanguard and you are a Vanguard person, because they don't pay intermediaries. So you had to find Vanguard. So if you found Vanguard, you're definitely into low cost and the Bogleism. You're probably not going to be the person who's swayed and going to put all their money in Bitcoin. That's just not who you are. So there's no harm, I think, in them putting it on their site. Whereas you could argue like putting big advertisements on Robinhood for the new Bitcoin ETFs could be a little risky because people are just going to go crazy there. So I just think they shouldn't have done it. And I do think they'll lighten up over time because they have an advisory service. So they don't only offer funds, they also will advise you on all your money, like your estate planning, your taxes. And if you're an advisor, you kind of need access to everything. So like if your client is like, hey, I actually want private equity or Bitcoin, you kind of have to get it for them. They're going to leave. So I think their move to become a bigger advisor is going to push them into offering Bitcoin at least. If not, they're probably not going to have a fund, maybe. Times change. But for now, I get why they did it. If my metaphor for this, somebody said, oh, this is their Bud Light moment. Like this is going to ruin them. And I'm like, no, because Bud Light really crapped on their own bases
Right.
views. Vanguard did not crap on their bases views. This is more like Walmart not letting the gangster rap albums in the late 80s on the shelf. Like Two Live Crew and NWA. These are my favorite albums as a kid because they had the parent advisory label on them. But Walmart wouldn't carry them, and it gave them more intrigue. So I actually think Vanguard saying no gave the story another news cycle. It created conflict and attention and intrigue. So I think if anything, Bitcoin ETFs benefited from that, but Vanguard certainly wasn't hurt, in my opinion. Some of these Bitcoiners are like, boycott Vanguard. One of them's like, and I can tell he's a .eth guy, and he's like, I just called up Vanguard and moved all my money. I'm like, there's 0% chance that actually happened.
But Eric, to your point, at some point, as this asset class continues to grow, it's going to have to make numbers and sense for them where their CFO or their board is going to say, "Hey, we're missing out here." When he goes back to the business and the economics of running that business. So, do you think it's a year or 2 years out that they make that switch?
Yeah, I would say 2 or 3 years. Now, I'm just saying they let them trade on the platform.
Mm,
I'm
okay.
not saying they offer one, but Vanguard sometimes if they can't find a good product for like as an advisor, they may start do one themselves
Mm,
because they can do it cheaper. They may go, well, we can do this cheaper. We can use our mutual ownership structure to keep bringing. They may just do it themselves. But I would say that let's go in stages. First step is just letting it on the platform. And I do think they'll do that eventually. 2 years, I don't know. We'll see. At the rate Bitcoin ETFs are going, it seems to me that there is going to be some FOMO and more if you have their main competitor BlackRock getting a hit product here and they're seeing that this is like used as a legit portfolio allocation in the BlackRocks and the Fidelities of the world and it's oh it's going to reduce Sharpe ratio and there's some more adult like rationale as opposed to just when moon or whatever. If there's more of that, they may go, all right, well, all right, it's fine. We'll allow it. But I think they at this time the reputation of Bitcoin is degenerates, Sam Bankman-Fried, all kinds of as Gary Gensler put it, fraud and hucksters. And it's a commodity on top of that. We don't need it. So I just think BlackRock and Fidelity are their two biggest competitors. So if they're in it and they start to like, I don't know, it might irk Vanguard also that, hey, it's not just VanEck or Valkyrie having success. Like they could care less about those companies. But
right.
BlackRock and Fidelity are their two main competitors and they do care about what they do.
Absolutely. Now, Eric, you have a plethora of experience around ETFs, and you've seen other asset classes have ETFs launch. Give us some perspective here. How does the Bitcoin ETF launch compare? Is it an outlier? Does it stand out significantly? Is it something you've never seen before in the ETF world?
Yeah, no, I look there. There's been big launches, and there's been really highly publicized launches. When gold launched, GLD, that was a big deal. And I'd say that was the only equivalent to this
Hmm.
because they're like, for example, remember, Dave Portnoy launched that ETF Buzz and
Yeah.
he had all the marketing. That thing, I think it traded 400 million on the first day,
Hmm.
which is an insane amount for an indie small ETF. I mean, he really got to give him credit for getting that many people excited. But like Bitcoin ETFs did billions.
Hmm.
Um, they've already surpassed. If you just look at like the first month or the first 6 weeks, we're about week 7, I think. If you stack them up on any measurement, they blow everything away.
Hmm.
At this point, you could probably find something in there like, oh, if we look at the first 2 weeks and we X out GBTC technically, and we adjust for inflation, technically the GLD actually was tied. Like there are ways to maybe find a spot in the 7 weeks where it wasn't earth shattering. But if you go 1 week, 1 day, 4 weeks, 6 weeks, 7 weeks, you look at volume, assets, flows, post GBTC, extra, whatever you want to do, you're going to find they blow away every other new launch record. It's getting to the point now, and I just told you that I'm looking at the most ETFs traded.
Right.
This is out of 3,400. IBIT is seventh. This
Wow.
is, this is right up there with SPY, QQQ, IWM. These things have been around for 25 years.
Right.
This thing's 7 weeks old. I've never seen an ETF go right up to the top 10 like that in this sort of a time. So, and I think GBTC is in the top 30 and Fidelity is 38. I mean, if you added them together, they'd probably be like the fourth biggest most traded. And if you're the fourth most traded ETF, it puts you around number 8 in terms of all equities. So if you combined all the trading in the Bitcoin ETFs, in fact, I'll do that right now. You're looking at something like, let's say we'll call it. trading about as much as Apple.
Mm. Wow.
That's a lot, right? So this is volume, and I get it. Some coiners are like, "Oh, you talk about the volume, but it doesn't necessarily mean the flows are the same." And I get that. Only a portion of volume converts into flows. But you have to understand that ETFs are trading vehicles,
Right.
and volume is so important long term, and it's important for bigger fish. If you're an institution, say you're a hedge fund or a prop desk, a trading outfit, or a pension plan, and you want a little crypto Bitcoin exposure, you love the fact that you can put on $100 million trade or a $50 million trade, and no one will notice you.
Mm.
That's a big deal. If it doesn't trade a lot, then I was like, I don't want to be half of the assets. I don't want to push the market price. I don't want a hedge fund to see a big fish coming in and try to game me. The more volume there is, the more anonymity these big fish can come in without anybody noticing them. They love that. And so they prioritize liquidity over everything else. So the volume is really good, even though it may get people hyped. Oh, it traded a billion. They think, oh, that's going to be a billion in assets. It doesn't quite work out like that. Some
Yes.
of it will be inflows, but the volume is like if you were fishing for professional institutional traders and they were actual fish in a lake,
Mm.
and you were tasking me what bait to use, I would tell you volume.
Mm.
More
Now,
important than fees, even. Advisors love fees and low fees, but these are already low. So I always tell people if you want full maximum category growth, you need two things: low fees and high volume. And they got both already. So they're in great shape. That's why we track volume. Volume also, in my opinion, portends flows and assets later. Like, for example, in 2008, in the awful sell off, a lot of institutions discovered ETFs for the first time because they were liquid when other things weren't. So let's say there's some kind of massive crash in the market, and Bitcoin's kind of brought into that. And there's some illiquidity in the Bitcoin market. I guarantee you, IBIT and FBTC, these will be the most traded things that offer Bitcoin. So
mm.
institutions are going to be like, I'd rather use the ETF than actually even interacting in the underlying currency. So
Right.
they're that's how bond ETFs got big. And so 2008, bond ETFs saw volume spike up huge. And in the years after, their assets went up. Volume is a lot of times also when someone gets their first taste of an ETF, they're like, oh, that was it. I had a good experience. They come back later. It doesn't always translate immediately that night. So, but volume is again, it's like measuring frequency or popularity. Over time, that volume does convert into assets. So to me, it's the leading indicator of a category's asset growth.
Hi, everyone. Pardon the interruption. I'm Tony Edward, the founder and host of the Thinking Crypto podcast. I have a huge favor to ask you. If you haven't subscribed as yet on YouTube or the podcast platforms, hit that subscribe button, hit the thumbs up button, hit the notification bell on the YouTube platform. And on Spotify or Apple or wherever you get your podcasts, please leave a 5-star rating and review. It supports the podcast. It allows me to bring great quality content to you. Thank you for your support, and I'll let you get back to the content. Eric, I don't know if you can take us behind the scenes of how um, the Bitcoin is actually bought once the cash is put into the collected by BlackRock and these other institutions. So the volume that we're seeing is in cash. And do you think they're buying the Bitcoin OTC or on the market from regular exchanges?
OTC.
Okay.
So there's going to be some like that. That is a great question, and some people on Twitter are like, oh, OTC is running out. I I got to explore that. I'm interested in that. I don't operate in that corner, but if you send an issuer money, if you're an AP, you can't send them Bitcoin. You have to send them money because
Mm-hmm.
you want new ETF shares. They take your money, they go buy Bitcoin through like Jane Street or who has it OTC. That Bitcoin then goes into their custodian Coinbase. As soon as that's done, they wire you the shares of the ETF.
Mm-hmm.
So you give them money, they wire you the shares back. In the meantime, they're going to Jane Street or somebody like that to get the Bitcoin, and
Got it.
that's over the counter. But yeah, will there be a time where they use other areas, or do they currently? I'm not sure, but that's the general way they do it.
Mm.
But that part of the market is it's not like it's opaque, but it's a part of the market that it's sort of like it's how the sausage is made. And when the sausage looks fine, you rarely go back and look in the factory. You're like, oh, I'm more concerned with how it's selling, what the marketplace is like. So, but it's a great question. But there's a good, I would recommend anybody interested in this. Nate Geraci
Yeah.
has a podcast called ETF Prime. He interviewed Matt Hogan, and Matt went right through like how a bill becomes a law, how an ETF converts, and I just paraphrased what he said there. Issuers have a direct view of this. I do not. I have to get them telling me how it works because, again, I'm like an analyst looking from the outside in. I'm a pundit, a critic. So I have the data, but I don't do this behind the office. But that's what issuers tell me happens.
Mm. Yeah, I'm very curious about the inner workings of that. And what do you think about Bitwise? They have released their wallet address where they're showing their Bitcoin holdings that are allocated to the ETF. Do you expect the other issuers to do something along those lines?
Nobody has yet. So I don't know. I think Bitwise is probably one of the most crypto-y native issuers. So it's on brand for them. Maybe ARK would do it.
Mm,
Because they're with 21 shares, and Ophelia Snyder is very crypto native, and Kathy's a big fan. I
mm,
could see them doing it. Maybe Valkyrie would do it. The bigger guys, no way. They just don't, that's just not them. They don't need to, they don't care.
yeah.
They don't, only way they do it is if a Bitwise did it and Bitwise started to get more flows than them, that would turn their head. I don't see that happening, so I don't see any reason for them to do it.
Mm. Yeah, that would definitely make sense. Like I'm sure BlackRock, they don't care, but like you said, if there was a competitive angle, where they were losing, that they would, capitulate and do the same thing. Now, I remember you tweeted about this, and I saw the reports, I think about a month ago, that major banks want to custody the Bitcoin ETFs. And the problem is the blocker is the SEC's SAB 121 rule, and they want to participate. What do you think about that? And let's say that gets removed because you see members of Congress are pushing back on that rule. What would that open up for the big banks like JP Morgan and what they would, decide to do with the Bitcoin ETFs?
Well, look, all of them could be issuers today, so they've all chosen not to. The guy who runs JP Morgan's ETF business, he said never say never,
Mm,
but he also said they're happy to sit this out and just watch all the craziness. So I think what it means, though, is that if banks are allowed to handle Bitcoin, it means they can be part of the ecosystem more. And the
mm,
reason they were interested to be part of the ecosystem after the launch was they were like, wow, this is bigger than I thought it was going to be. You have to understand, many people wrote this off, even really smart people. There's this one guy who used to work at Morningstar who's like one of the smartest ETF analysts that you'll ever meet. He's into the crypto space now, actually. And his predictions were so low, and I was higher, but they like were 10 times higher than mine. And his was like way down here. So a lot of people just thought this is all about nothing. All this approval watching, it's going to come out and it's going to be like, there'll be like a couple hundred million, but who's really the audience? Most of them, I think, underrated um, the power of the ETF.
mm.
Somebody the other day said, if you want to spend less money, stop shopping at Amazon and just go and get everything physically because everything else, just the lack of friction makes you buy more.
Yeah.
That's the ETF. So the ETF is so good that you could put like dog shit in it and it would probably sell a little bit of dog shit.
Right.
I think Bitcoin obviously has a real market, and I say that facetiously. There have been ETFs that flop, no doubt, but the demand is probably even somewhat generated by the fact that it's now so convenient, easy. It's in a trusted wrapper,
Right.
SEC approved, and it's with these big brands that everybody knows and loves that have been around for like dozens of years. In Fidelity's case, like, I don't know what, 100 years. So like this is a big deal for professionals, conservative people, older people. Like I said, I think that the Bitcoin ETFs are not for crypto people, they're for their parents.
Mm,
But
yeah.
their parents have a trillion times more money than them. So I was actually looking at there's 157 trillion dollars in wealth in the United States. The boomers and the silver generation have like 102 trillion of the 157.
Mm.
So they have the vast majority of all the money. And so even if a tiny, tiny sliver of that is like, yeah, I heard my kids talking about it, or I don't want to kick myself in 10 years if this thing does go crazy, even if I don't understand it. That's a logical thought. And so I think that's what people underestimated was the buying the Bitcoin ETF as a way to have a little fun on top of your boring 60/40 and the potential future FOMO cure. People know themselves. They even though they love their 60/40 and their Vanguard, they also like sometimes see something happen and they're like they don't want to miss out. And they think they feel with Bitcoin, it I don't understand it, or I even think it's a scam, but I don't want to be like feeling like an asshole 20 years down the road when it's $1 million and I could have just put a little in my account. So I think like future FOMO cure is an underrated thing. And the other thing is the idea that there's way less pressure when you're talking about the hot sauce part of your portfolio for a boomer. They're not going all in. They'd put 1%. And like, okay, it flames out. This is not the money that counts. This isn't my beach house. This isn't my kids' money.
Right.
This is just a little flyer on something that just in case it goes up, so there's just a lot less pressure. And if something's volatile and speculative as Bitcoin is, the fact that it's only 1%, you can stomach that volatility much better than if it were the whole thing. And so I believe that Vanguard in the core has actually done wonders for people's behavior with the crazy stuff. Look at ARK. ARK was used as a 1% allocation.
Right.
Hardly saw any outflows when it went down 80%. In the old days, they would have seen all the people left.
Mm.
But because ARK was simply a little hot sauce add-on, people were like, yeah, okay, I get it. Kathy's stuff is volatile, but I still think she has a vision of the future that could come true. And plus, it's only 1%. Who cares? So people are less likely to act. That's why this thesis I see on Twitter about this, all traders and weak hands, I would think the opposite. I think the Bitcoin ETFs are going to be much stronger hands than people think. Not necessarily because the people are strong. It's that Vanguard and the core has made them strong.
Mm.
And that's all that's underappreciated. But again, as a guy who lived in this book and the other book, I feel somewhat uh, trained to make this assessment. And when I talk to people and actually interact with them, anecdotally, that's what I hear. And then I look at the flows and then these sell-offs, you just don't see money coming out of thematic ETFs or ARK ETFs. So the stuff that's used in the hot sauce bucket doesn't necessarily, people don't leave when there's a downturn. Some will. And IBIT in particular could be like the GLD where it's traded so much where you do have these institutions who are using it in all kinds of different ways. And the flows might be like this. But over net time, you probably see an increase. That's what's happened with GLD, with Treasury ETFs. But there will be one that gets, I think, more sensitive to price. But like a Fidelity one or some of the other ones that are long-term holders, I doubt you'll see people running for the hills in a sell-off. A little, but it's not like I just don't. That's my take. And so the strong hands theory is also part of why people underrated the growth or
Mm.
the asset potential, in my opinion. But I'll be honest, I even underrated it a little bit. Where we are now, I thought there'd be 10 to 15 billion in flows after the first year. So we're already at 6. So
Mm.
we're essentially halfway to where my middle point is, and it's only been 2 months. My prediction's probably dead in the water, but I'm happy to be low. Um, I think we've been so optimistic on approval. We were optimistic on how these would be bigger than people think. Like we've been largely bullish the whole time that I think we'll get a pass for being a little under bullish, but we weren't like haters bearish. 10 to 15 billion is a legit category starter.
Mm.
GLD was probably, I think GLD's first year was like 1.5 billion. So you can see why 10 to 15 is pretty optimistic. But the 6 billion, I think, is pretty shocking in the first 2 months, or it's not even been 2 months, 7 weeks.
Yeah, it's wild. So, or do you think part of the, like you said, people's gravitational, pull or Bitcoin's gravitational pull to bring in these investors is due to the change in the macro and different industries? Like, for example, tech is a big driver of investments now because tech has been booming, right? Whether it's AI or whatever web technology and whatever, maybe just look at Nvidia, right? And things along those lines. Investors almost see Bitcoin as, hey, let's get as much exposure to tech as possible because that's been, even though it's volatile, has been giving great returns.
Yeah, so I think what you're bringing up is a really good point, which is someone, I forget who it was, an analyst who does podcasts like 2 years ago said, I just keep it simple. I view Bitcoin as a high growth tech stock,
Mm.
and I just want a piece of that stock. That's a good way to look at it. What I am not totally sold on is this idea that it's an alternative like gold, because to me it's a little too volatile to be a total alternative. It is a store of value, but it's too volatile, in my opinion, to be called an alternative. And it sometimes moves with the market. Like if everything went to hell tomorrow, like the stock market, I got to think Bitcoin's probably going to be like along with it. I don't see Bitcoin spiking up. Like if there's a huge inflation print, even though you think, okay, high inflation should be good for Bitcoin, I just think high inflation means Fed's going to raise rates, means the market tanks. And I think Bitcoin goes along with it because to me, for most people, Bitcoin is a speculative hot sauce outer layer of their portfolio. It isn't something they expect to hedge anything, and they shouldn't. But it's being sold a little bit by the fund companies as a sort of sharp ratio increaser, risk reducer. I'm not totally sold on that. I think over time it could be. But
Mm.
if you charted gold and Bitcoin, Bitcoin makes gold look like a money market fund. I mean, it's just too volatile right now
Yeah.
to so I like you, that's a perfect way to look at it. If I was telling somebody who was interested, I was like, look, I mean, just look at it as like some like high growth, maybe not yet quite profitable tech company. Like
Mm.
if you believe in it or you just want to not kick yourself later, put 1% in it, but just look at it like that. Expect volatility. And I would that's a great way to think about it personally. I think that's better than thinking of it as some kind of an alternative or a liquid alt, as they call them.
Now, great point that you brought up that, there's a high correlation with the stock market. And just look at COVID crash, right? In 2020, Bitcoin went down too with everything else and then bounced up when the stock market bounced as well. So it's following the stock market and global liquidity, M2. So to your point, maybe over time that changes, but the facts, the data don't lie. It's moving with the stock market. Um, Now, let's talk about the 80/20 investment rule, which has changed to 60/40. But as this asset class matures and it goes beyond Bitcoin, you have altcoin baskets and altcoin ETFs. We're going to talk about the Ethereum ETF. And then you have tokenized securities, real estate and stocks and so forth. Do you see the portfolio split becoming 60/30/10 and 10 being digital assets?
Um, 10
This is
seems
like
high
maybe
to
10
me.
years from now.
It depends. Like for a younger millennial, 10 could be right on the money.
Mm.
I don't see boomers doing 10.
Sure.
Um, I'm Gen X, and if you're talking about me personally, I wouldn't do 10. I'm, but it depends. Let's say an Ether ETF gets approved. I don't know. I just think I don't know if any retail is going to go back to the days of like shit coins and like, in getting excited. I think Bitcoin in particular is it. Maybe I'm in the Michael Saylor camp that there is no second best. I mean, if Ether's going to come along, I was just talking to a guy today, like Ether coming after spot Bitcoin is like the opening act trying to follow the headliner. It's like reversed.
Sure.
ETH should have come first. Spot Bitcoin is the main attraction, the headliner. I'm much less interested in anything else. And I think over time, like GLD or gold ETFs have like something like 90% of the physically backed commodity assets. Silver is a tiny slice. Palladium and platinum are even tinier. That's probably what you'll see here. But could you argue, okay, maybe I need some 3 or 4 coins? You're going to see once they have Ether come out, they're going to have Bitcoin plus Ether in a proportion to the market cap. that could be something you put in. Again, I still wouldn't do 10, but I would do one. But younger people may be more interested in that. I mean, the Bitcoiners, it's amazing how little faith they have in 60/40 stocks and bonds, which I think is a mistake, but that's their choice. So clearly there's some correlation to age and interest in putting more into non 60/40. So yeah, it could be for a young person who's really into this, it could be like instead of 80/10/10, it could be like 80/10/10 Bitcoin stocks bonds.
Mm.
I mean,
Yeah.
or for again, I've been on several podcasts where they're 100/0/0.
Wow.
I mean, they are like, I mean, are you one of those guys? Are you like 100%?
Oh no. So my wife wouldn't allow me to. So
That's the thing. See, you're married.
yeah.
You have kids yet or no?
Yeah, I have a 6-year-old.
Oh, yeah. So this is the thing. You know, some of these degens, they're single still.
Yes.
So A, they may not have gone through a true crash. B, they don't have anyone talking sense to them,
Yeah.
or like, hey, dude, we're not putting all this on your dumb coin. We have to plan for the kids' education.
Right.
That kind of real world pressure, I think, is going to move people more to a 60/40 combo, the coiners. But I asked somebody, I said on Twitter today, has anybody ever successfully 60/40 pilled a Bitcoiner? And they were all like, get out of here. That can never happen. Once you go Bitcoin, your mind cannot come back. And I'm like, this is a little scary to me. And I'm like, I feel like everyone who replied is single. I don't know. Maybe I'm stereotyping,
Or very
or at least
young.
they don't have kids yet.
Yeah.
Once you get kids, especially and a house and a mortgage, it's like I don't know. I don't think you can put the whole ranch on this. I wouldn't feel comfortable sleeping at night on that. But there some people just when you go that all in, I find that it's almost like they've gone all in on like this destruction of society thing.
Hmm.
And that's also another. So your bull case is something so really dark and wild.
Yeah.
I again, like it reminds me of the 2008 Big Short people. Yeah, they won, but like America collapsed. And there was this sort of empty feeling at the end of it all. And I don't know, I wouldn't want, it just seems like going all in on that is, it's like a deeper dive down the rabbit hole than I'm capable of. So
Look,
I think most of the people who buy 10% or 1%, they're not going to go that deep. They're going to me, this is a little like new gold, uh, shiny object, and I'm moving on with my life.
no, Eric, you're spot on because for me, as someone who's neck deep in crypto and I have a good amount of crypto holdings, right? Um, I have also a financial advisor. I have a college fund for my daughter. I have retirement accounts with, well, I shouldn't mention the name, but anyway, it's one of the Wall Street
Sure.
firms that people know. So, and guess what? My wife made sure that we had all that stuff because if it was up to me, I would be irresponsibly exposed to crypto.
So
But
that's
good
that's so
balance.
that's interesting to me. So
Yeah.
you basically, and being honest, if you were single,
Yeah.
you'd be all in.
I think so. And
Yeah.
and the
So
mindset.
in other words,
And
you have stocks and bonds and an advisor,
yes.
but spiritually, that doesn't do it for you. You do it more so to just check the box with being a responsible adult and a husband.
Exactly.
Gotcha. That's interesting. And
Yeah.
that does validate my theory that part of the 60/40 lifestyle is the domesticated lifestyle.
Yeah. Absolutely. And like you said, I have a mortgage, I have a daughter. So there's all these other facets of my life that I have to be focused on. And I can't, and crypto is very volatile, still new. But the good thing is, I think my wife is coming along more to me being a bit more. So if I were to split my holdings, I'm 60% crypto and 40% in traditional assets.
So you're like a 60/40 new school.
Yeah.
Yeah. Yeah, no, it's that makes sense to me. More than 100%. Um, but yeah, anyway, you just gave me a little more anecdotal data that just again sort of solidifies my view of correlations between being all in on crypto and your domestic situation.
Yeah, it's fascinating. And then, you were mentioning about boomers having the majority of the wealth. look, in another 10 years, fortunately, those boomers will pass away, and that wealth, I think there's been reports about it, will trickle down to millennials and Gen Z. And where will they put the money, right? It's interesting demographic shift and where capital is going to go. So now there's talks of an ETF coming out of Hong Kong. We saw it, I think the first application go in a month ago. The US is the largest capital markets, but do you think Hong Kong could put something together here and there's a lot of capital coming in from the Asian markets?
Yeah, sure. I think that's yeah. Let me give you data though. In the world, the US has 25% of all ETFs,
Hmm.
but we have 70 something percent of all the assets and 85% of all the volume. So the US just kicks global butt. So yeah, I mean Hong Kong's probably like 111%. So you can get excited, but it's a speck of sand, it's a drop in the bucket. But I think the more people globally that get into this, probably the better, I think, for your cause.
Sure.
So it's additive, but I don't really see it as being that impactful. What's impactful is seeing iBit today trade, as much as Netflix or
Sure.
whatever. That is so much big deal. So it's not, it's part of the story, but it's like a footnote in my opinion. Hong Kong.
Hmm. Yeah,
There's
that
just
makes
so little money. There's so much money in the US and liquidity, and even people like, I wrote a book called The Institutional ETF Toolbox. I heard the story, a Japan pension. So in Japan, pension uses EWJ,
hmm.
which is the iShares Japan ETF trading in the US because it's just more liquid and cheaper. So it went halfway across the world to invest in stocks that are right next door.
Wow.
So you're going to find the biggest, most serious investors are still going to use the US spot Bitcoin ETFs. But for local retail, it's definitely going to help, I think. And it will help bring costs down to the crypto exchanges. So it's all net positive, but tiny.
Sure. Let's talk Ethereum Spot ETF. What are your expectations? Are you expecting an approval this year or possibly 2025?
James is really looking into this now. We have to have an answer because we're getting asked more. I see approval, whether it's the final deadline is in May, and it's BlackRock.
Hmm.
BlackRock's big, and Grayscale also has one, and they want to convert. And we're in this deja vu situation. Like, will they sue if they're denied? Does the SEC know this? Will they just approve it not to get sued? A lot of unknowns, but at the end of the day, I'm just going to stick to the eye test. They approved Bitcoin futures, and when they wouldn't approve spot, they got sued, and a court said you have to approve them basically. So they approved spot. They already approved ETH futures. You do the math. So either they're going to approve them because they don't want to get sued, or they're going to get sued and then approve them. I don't really see any other scenario playing out. And you can't use the securities argument now because they've already approved ETH futures. That's out the window.
Sure.
So my guess is they approve them just to get the hell off the plate, and after that, there's really nothing down the road because Bitcoin and Ether have futures which are regulated by CTFC, and that is an important part of the deja vu. Once you get to these other coins, like there's no real frame of reference for them. There's no futures market. So I'm way less optimistic after Ether. The question is, will they approve them by May? I think James and I are a little over 50% by May, but then our odds go up every month after. Like, so the more you go out, their odds just go up. There's an election coming up too,
Yeah.
which could mean a new SEC commissioner, which could mean a whole new sort of thing to think about. So, those are all variables, but I'm fairly optimistic that we'll see Ether. But again, this is like getting excited for um ready. I don't know how old you are. I'm going to throw out Gen X references here. This is like, you've got Sister Hazel opening for Nirvana.
Yeah.
Okay. Nirvana is literally, so it is flipped. You've got Nirvana
Wow.
opening for Sister Hazel with their one hit wonder. I don't know how many people are sticking around after Nirvana. I'm sorry. So this is like getting excited for Sister Hazel.
I absolutely understand the reference. I am a millennial. I am a Nirvana fan, and I know about Sister Hazel.
Yeah, so that's my metaphor between like why, I can't
Yeah.
get too pumped about Ether or even too emotionally or mentally committed to it. It's part of my job. I got to have an opinion. James is going to be more into it than I am.
Real quick question here, a rookie question. So you mentioned that the securities question is out the door because the futures were approved. It, so to confirm, something has to not be a security before it can get a futures approval?
CTFC approved Ether futures, which I guess is them saying it's a commodity,
Okay, I see what you're
which
saying.
is part of what's been used against Gensler's comments the whole time. I believe James would be able to really fine tune this, but that's why the approval of ETH futures, not just ETH futures, but the ETH futures ETFs,
Hmm.
ipso facto, is like him saying it's a commodity, or it's him saying it doesn't matter that it's not a commodity. Either way, the
That makes
genie's out of the bottle.
right.
Yeah.
Yeah, yeah, that makes sense. And I think to your point is just Gensler has been the one keeping some sort of anonymity here with not answering questions. Patrick McHenry was like,
Yeah.
"Sir, is he doing?" And he refuses to answer it. But
Yeah.
under Jay Clayton and Bill Him these guys, they had clearly stated Ethereum is not a security. So he's added some confusion. Um, and it is what it is. I think I said anonymity. I meant ambiguity. But yeah, it's interesting, and I hope he approves it, and we don't have to go through this court battle again. But maybe to your point, it's an election year. He is Biden appointed, Biden administration appointed, and maybe they don't want to look too bad as we get closer to the election. So maybe things will go smoothly. We'll see.
Yeah. We're gonna work our back channels. What I need is some good tip. I need a back alley tip from one of the lawyers or something. Right now we don't really we're not running on anything. We haven't heard the SEC reaching out to any. We have seen ARK and I think it was just ARK
Hmm.
update their prospectus to include the comments from the Bitcoin cycle. So like ARK's, ready to go. I mean, they've already updated their comments with like their prospectus incorporating the comments that happened during the Bitcoin ETF cycle. So that doesn't mean anything though. I mean, it means ARK's always been like a little bit of like head of the class and all this stuff. Like every time there was a comments, they'd be first out with the comment updates.
Yeah,
And so I don't know. I like patterns and just to see them out in front, I feel like some level of comfort, but I have not heard of the commission reaching out to anybody. And that's what I would really need to see to get excited.
absolutely. Eric, I know we're running up on time, so I got some wrap-up questions here for you. If you could create your own metaverse, what would the theme be? Where would
Metaverse
Eric
theme.
go?
Um, oh man, that's a good question. You know what? Probably like one of my favorite places to go is like the Southwest, like Arizona.
Mm.
Like Roadrunner and Wile E. Coyote.
Oh yeah.
I would want to chill there. I'd want to go to like little like what like I just want to be around like reptiles and tumbleweed and like those mountain things and because it's so different than where I live in Philly. I live in Philly
Oh,
and
yeah.
like I'm close to the beach. I go there enough. We got trees here. One thing we don't have and what looks like another planet to a Philly person is like Arizona.
Sure.
And so I'd make it Arizona theme, something like that.
Nice. And rapid fire questions. Favorite food?
Crab legs, just
Favorite music?
crabs.
Just crabs.
Yeah, because
Favorite-
I like blue claw too. Anything crabs to me is the top.
Um,
If I have one meal left,
uh,
I'm going 3 or 4 pounds of king crab legs.
oh, that's delicious. Favorite musician or band?
I would say Radiohead
Mm,
and all of Tom York's little side projects. Even though Radiohead probably pound for pound better, but I grew up with them. They're my favorite.
nice. Favorite movie?
Oh, it's tough. I mean, Jesus, there's so many good ones. It changes too. I would say that I'm going to be lame and probably go Godfather. Godfather, even though it's so cliched, whenever it's on, I get sucked in totally.
Me too.
Same
It's
with two.
yeah.
It's
still
such
rewatch.
beautiful filmmaking. Like the characters, the family story, everything is just so money. It's like the Mona Lisa of movies. And so it's my favorite. And by the way, if you are a Godfather fan, go watch the Offer. The Offer is a series that Paramount made with Miles. Um, who's the guy who was in um, Miles Turner? No, Miles. Who's the young actor with the first name Miles who was in Whiplash?
Oh,
And he was in Tom Cruise Top Gun 2.
yes. Yes, I know who
That
you're
guy.
talking about. I forgot his name.
Whatever, Miles, whatever. That dude plays the producer who put together Godfather. And the whole thing's about trying to put together this movie over like a couple of years. The
Wow.
mafia doesn't want it made. Frank Sinatra is like sent. Like, there's, they don't want Al Pacino playing the part. It goes through the whole, like on the edge of getting this movie made. It was ridiculous. It's a fascinating like 7-part series about the making of The Godfather. Highly recommend.
I'm gonna watch that because I'm a fan. Even read the books.
You'll love
Yeah.
it. You're gonna be so into this. I promise you.
Oh, I'm gonna check that. The Offer, right?
The Offer.
Perfect. Favorite book?
Oh man. You know, I'm gonna go with a book I've read twice in the past like 10 years, which is Chronicles by Bob Dylan. So this guy wrote one book. Bob Dylan influenced the Beatles. Like the Beatles would be singing "Yeah, yeah, yeah" if it wasn't for Bob. Bob Dylan completely changed the whole course of popular music. And he wrote one book. And in this book, Chronicles, it's not like a general biography. It's all about him. Um, it's not even written in like a normal fashion, but what you realize is it starts with him about 12 years old and it
Mhm.
ends with him right when Blowing in the Wind blows up. Right. So it's like 7 years and he's sleeping on couches in New York. He's going to these different art gallery openings. He's reading books that are next to, and what you realize is that what he's doing is he's explaining to you what went into his brain to allow him to write all that stuff. It is the best book on the creative process by one of the most creative people you'll ever meet. And then the second half of the book starts when he's down and out in 1985. Remember you ever see the picture of him from We Are the World where he looks like fat and lost? When they're singing We Are the World. Anyway, Bob Dylan looked bad in like the 80s. Bob Dylan was like, Madonna was popular. Bob Dylan was lost. So the book then picks up again in the 80s when he felt he was like in the gutter. He was like, I had no life, no spirit, nothing. And he was touring with Tom Petty and was like, this guy's so like on top of his game. And then it goes into how he found a second creative birth. And then it ends when he wins the the Grammy for. So none of it's about the successes or who he dated or anything. It's just about how he find his creative footing before he made something that had an explosive popularity. And I read it again. It's just there's so much in there from, in my opinion, one of the best. If we're talking like Tennessee Williams or like premier poet artists of this generation, I'd put him right at the top. Top three. And so this book you get into his brain and creative process, and but he doesn't lay it out. The way he writes, you just figure out while you're reading it. Oh, I see what he's doing here.
Hmm. I got,
Anyway, it's a fascinating book. There's many books I love, but I thought that was just a good one for people who are like watching podcasts or probably like creative types. So
yeah,
I'd recommend that.
I will check that out. And finally, when you're not working at Bloomberg, what are you doing for fun as a hobby?
I like to play tennis, coach my kids' basketball team, um, and I'll leave it at those two. Those are my two hobbies for now. I do a little painting, a little acrylic painting. And when I get into it, I love it. But sometimes I just forget to do it. And I get busy with like parenting and all this stuff. And then I end up just watching TV. But um, I really, I'd say tennis is probably my main hobby right now.
Nice. Eric, absolute pleasure chatting with you. As always, I follow you on Twitter. You always provide great content and great updates. So thank you for joining me.
Yeah, great to be here. Nice chatting with you.